let's get back to, so the infinite loop, how does it work is once you get to a certain phase in your wealth cycle, so you can invest in two different things. You can invest in multiple different things, but let's just call it business and let's just call it property, right? Business could be shares. It could be investing in businesses directly or buying some equity or whatever it is, or it could be owning a business. In my example, it's owning a business, and I went into owning a business first and built up. If you can get to that point in your business that you can sort of like start to remove yourself from it and then also take money out of it and build up a little bit of cash, then what you can do is you can go away and take that cash and purchase a property with finance, which is where finance supercharges your wealth growth when you're buying stable assets, and assets that are not as risky as, say, business, like property, right? It moves a lot slower, and it's a smaller ROI typically, depending on the asset. There's different nuances there. We won't get into that. But then you can take your cash, purchase a property using some of your own equity in your bank account, your cash, and get finance with it. And then what you can do is you can allow that property to grow by itself without you having to do any work, because the economy and the inflation allows that to grow, and you're purchasing an asset at a price where it's like the cheapest it'll probably possibly be with finance, and that will grow over time, right? And then as that grows, what you can do is you can then see that grow maybe over a year or 2 or 3 years, and it can build up some equity, right, as that price grows. Then you can take that equity out, right, and then you can buy a business with it. Or you could put that back into your business if you know what ROI you're getting from your marketing and it's accurate data, right? So you have 2 different ways you can do it. You can purchase another business or put it back into your business you already have, and that'll grow your business. And at the same time, you've got your property portfolio growing, or your property growing. And in that 2 to 3 years or whatever it is that property is growing, you got your business growing with more cash as well. So you can purchase another property, and then the more properties you purchase, the more equity you can buy that you can roll over into business. Now, let's just talk about the other way around as well. If you invest in property first, which may be the case for people listening, is you might scrape together 50 to 60 to 70 to 80K and you buy your first property. Like what I did is I bought that property for 80K, and it grew, it was a non-typical case.
80K cash.
80K cash.
Use leverage.
Yeah, use leverage. And non-typical result where it grew 95 grand in 9 months. But let's just say it was like you bought something and it grew by 30 grand a year or 40 grand a year. Let's just say 40 grand a year, and over 2 years you've got 80 grand. You can go away and purchase another asset, property, with the 80 grand, or you could roll that into a business, and that business would make you 20 to 30% ROI per year, right? Yes, you can buy $80,000 businesses. They're out there. You can buy $50,000 businesses. This is what I teach people to do. And then that money that you can get from the business, you've got 2 buckets working. You've got property, it's growing, and then you've got a business, which is a bit more, depending on what size business you buy. If it's under the 500K range or under the 300K range, typically it's going to be a bit more of an active investment versus a passive investment. But then you can grow that, and then you can take that money from your your business, and put it back into property. And then you can have these 2 buckets growing where you'll earn income through your business, roll it over into a property deposit, and that property will grow and earn equity, and then you can roll that back over into business. And it can be that's what I like to call the infinite loop of wealth, which is what I've been working with the last sort of 3 years with my clients.
I also look at it as a de-risk strategy.
Yes, absolutely.
And then you've got 2 separate entities working for you. It's just
because business cycles don't move in the same cycles as property cycles.
Yeah, and and from the business side of things, the income that you get out of it is a lot greater. But time as well. It's the properties that I like to focus in on investment wise are more passive. There's always an element of work to do, and it's kind of like the energy put in is hopefully the energy you expect to get out, right? So it kind of goes back to what we were saying at the start of the podcast, though. That's not always the case. There's definitely more efficient ways. So if you buy the right property, it's more passive. If you buy the wrong property, it can cost you a lot of time and energy with tenant turnover, maintenance. and that's the same as as a business, right? So if you can try and get that balance, and what it's the ultimate goal, right, is just working towards that time that is going to give you to even just sit down on your couch or go for a walk on the beach and just reflect, all right, okay, this is where I am today.
Yeah.
Where do I want to be? And there was this classic quote, I don't know if you came up with it. Jared used to always say, if you're too busy working in your business, you're not working on your business.
Yeah.
And that's the same in like the infinite loop of both the property and the business side of it. Like whether business can be your employment as well. It's not just you have to own it.
Exactly.
As a PAYG, you're generating an income out of that. That is a business in its like sort of like simplistic form. But if you're so busy doing that, then you're not actually giving yourself that time. And also as a business owner, like a lot of people do want their employees to be so run off their feet that by the end of the day, they don't have time to go, how can I get out of this?
Correct.
This hamster wheel.
That's society. That's what we are taught. I mean, we're getting to a bigger issue here, but I guess we shouldn't go down that rabbit hole. But
yeah, we'll do that another time.
Yeah, but that's exactly right. Like people that don't have time, they can't process and digest how things work, and they can't use the world or certain things to their advantage. And that's how we become trapped.